Hello, traders. It's Thursday, the 17th of October, 2019. It's 8:02 a.m. Chicago time, episode number 1619, 1619. Hopefully, you can hear me loud and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is back to risk on mode, pushing higher overnight. We did test all the way down to the low of yesterday, and the market's currently trading at 3,001, just above the 3,000 level, and it's been kind of ticking back and forth through the 3,000 here recently. The key elements or the theme today is that we may have an agreement in Europe between the EU leaders and Brexit and the UK for Brexit. No, the deal is not likely to be seen today. There is some resistance from Northern Ireland on this deal, but overall, it's looking like they may have something in place. The market's popping higher on that. There have been some uh, releases this morning, but nothing really worth going over. Overall, it really is hinged on good news as we move forward. So everybody wants this Brexit deal to be finalized. Yesterday, the Federal Reserve Beige Book noted that the economy is expanded to a slightly modest pace, downgraded from prior view of modest pace. Household spending remained solid as employment rose slightly as worker shortages persisted. Manufacturing continued to struggle. Early impact of GM strike had been limited. Uh, you know, the fact is, as I wrote in the um, Convergent Head Trader channel this morning, let's not kid ourselves. We're gonna end up with some sort of a deal in terms of Brexit and this China trade deal stuff. It's really not in anyone's interest to continue to argue and draw this out. Maybe it's good for politics for 2020 for the president and so on, but in the short term, but really overall, it's impacting farmers and so on. I mean, we have this trade war, and then at the same time, we subsidize farmers in more of a socialist way. It just doesn't make sense. So to me, the market really is ready, has been consistently ready to launch up um, on any news that has anything to do with good news. So shorts, as they have been since 2010, maybe shorts are likely to struggle to make headway in this kind of environment, in a news-driven environment. So as they say, the market will climb a wall of worries. That's just my opinion. I guess I'm editorializing instead of stating facts, but it just seems like the market's just waiting for the slightest indication, and it lunges forward. In terms of what's expected today, major releases, there aren't any. There are two Fed speakers at 2 p.m. Eastern. Also, the monthly budget statement in the U.S. We had some numbers this morning. As I said, they were minor. You can look those up. We're looking for the inflation rate out of Japan this evening at 7:30 p.m. if you're trading the Asian session. And then at 10 p.m. Eastern US, we get China's GDP growth number that's expected to be a mover. Let's take a look at what we expected yesterday versus what we got in our review segment. The primary scenario yesterday is to respond up to the point of control, potentially push the overnight high, um, which was at 98.75, and then revert back, drop into 29.8150 and hold steady. I was looking for a small double distribution. Here's what actually happened. So up to the point of control, consolidate in the middle, drop into 81.50, and then hold sideways. That was the main expectation. What do you know? We have a market that is responsive up, responsive up to the point of control, so that's so you can check that off, and then drops, but doesn't get through this area into 8150. Actually turns around at 8475 in the morning, and then on the retest it was just too weak. To me personally, this looked like it was is very likely to go neutral. We had a pretty good rotation down. It was a bit of a grind, but at this point we were under the opening print, we were under mid, we were under VWAP, under the major part of balance with a multiple bottom, local low, local weak low. It seemed to me like 81 would be next, but it just didn't have it in it. It turned up and ended up closing in the middle. This is a normal variation day or a variation of a normal day, depending on who you ask. And the overall profile is quite balanced. Um, it kind of mimics the Monday trade a little bit, except it extended up a little bit farther. But really, a lot of respect showed a lot of respect for the balance area, and it's doing so again today. This balance area is shows up at the MC point of control, shows up on the composite, and shows up on um, in this week's trade, this Tuesday's trade. So overall, a market that's quite orderly. We still have a gap zone beneath us between 75.50 and 72.50. We have an even bigger gap below that. But the market's not letting go of higher prices, and this is really an important indication to anybody thinking short. I'm going to spend a minute today looking at the bigger picture chart. Again, I like to do that constantly. Here's the August balance, here's the September balance, and then we have spent a good portion of October, the first week and a half of October down here, and now we're in this area. Because we're trading back and forth, it is time to put on a micro composite and see where balance is in that micro. I know it's hard to see in yellow here, so I'm going to shade it. Let's make it blue just for it to stand out a little bit. So here's the way balance looks. Let me thin these out. So here's the way balance looks. The point of control here is 29.90. Point of control is 29.90 in this area. And it's pretty much where we spent our balance yesterday. So a big balance area down here at 74. This is the gap zone, is the low volume node. There's another high volume node above, and which was the point of control we tested yesterday, and we are above that. We're in the 3,000 area, which is the next biggest or high volume area, and we're stuck there. We're trading at 3,000 right now, and we're trying to we're pushing to make our way through, and above that we have the 3005 low volume node. Once we clear the 3005, we are likely to push into these two prongs up here and balance and kind of smooth this out, likely to push into 3015, and then from there a local high is likely to be made. We're just the market's really in a holding pattern looking for good news. But overall, it's notice these bars, despite the long tails, are finishing higher than where they opened. They're white bars. It's the market's really hanging on for dear life when it comes to higher prices, and that's just the way it is. Here's the overnight session. We reopen, we push down almost to the prior low. We trade in a sideways pattern through most of the night. The Europeans come in right here at 2 a.m. my time, and buyers push in. The Brexit deal information comes out right here, and we've pulled back almost to the mid. The full session VWAP mid, a nice little setup there that was mentioned by one of our head traders in the head trader channel on Convergent. and we are sitting sideways with the point of control just above us. The distribution of this profile tells us the market is in price discovery mode. It is not in balance, and the volume has been pretty decent, 249, 250,000 contracts. It is really battling this area pretty good, and we'll see how it plays out here on the open. Do we climb back up to 3003 and start challenging that 3005 low volume node again and get above and take off to 3016, 1516, or do we just muddle around in here and put in another balance day as the market goes back into a holding pattern? In terms of leaders and laggards, I didn't say anything about this, but the Russell is leading this morning, up 6.8 points or 45 basis points or 0.45%. The laggard today is crude falling off. Crude has actually fallen off even farther than when I was doing the homework on it, down 40 cents. The equity indices are all higher. Nothing huge, but is slightly higher. The 10 years down 2 big ticks. The bonds are down 5 ticks, and so on. Let's take a quick gander at our order flow in the overnight session. This is again CT Bookmap. You can find it at ctbookmap.pro. It's you can see that the session is quite normal. Lots of dead space. If we tone this up, we see that there's nothing really special going on here. There was some liquidity, of course, at 29.99, 3,000, which was taken out right here on the news. We pulled back almost to that area and had a collision, a buy collision. Somebody really wanted to buy these. But other than the news event that gave us some volume, it's been a pretty muted session. Where's the liquidity? 29.90 below. 29.90 below. That's yesterday's point of control, basically. And then 3009, 3010 above, and then 15 above that. Remember, this is the next big target area if we push through 3005. So if we can take out the 3005 again, that's the overnight high now, and it's the composite low volume node, then we are likely to fish through this volume to get back to 3015. The highest volume price in this zone is that 3010 area, so pay attention to that. Beneath us 3090, and then there's not much till 2990, not much beneath us to 2980 and 2975. Those look like option hedges more than anything, every 5 points. So that's what the order flow looks like. Now let's take a look at what we're expecting for today. For today, we have, change of color. For today, we have most likely an open auction out of range. We're opening inside of this big area from 2 days ago. Expecting an open auction out of range. I'm expecting a very small reversion back down into this 29.97.95 area, and then I'm looking for an impulse back up to through 3005. Take out the overnight high and then push into the 3010. There's liquidity up here and a major area. I expect it to struggle, but ultimately I'm looking for the market to continue to push higher. This assumes, of course, no tweets, nothing external pushing the market around, but I'm looking for a continuation, and we have balance from yesterday, and this is why I'm expecting it to have a little bit of fuel in this area. We have kind of a fat balance area. The secondary is we're looking for an open auction that drifts up, gets into this this high volume node from the overnight session, the overnight point of control, squeezes almost to the overnight high, and then eventually takes it out, and then consolidates and waits and balances in the same area. We end up with a higher high, higher low, but we're still hanging on we're potentially still hanging on to this high volume area on the composite. 3005 down to 2993 becomes kind of a key area for the market to rest some more. 2993 and 3005. Um, that's about 12 points, and that's as much as we can expect right now, again, barring news. So those are the two key plays. Ultimately, at the end of the day, we're wanting to push higher. You can see the market's been facilitating upwards much more easily than downwards, and that's likely to continue. Okay, just read the auction for what it is. Try not to imagine um, try not to kind of impose your imagination on the market. Just trade what's there. Just have a plan for what to do when it does what you expect it to do. That's all I have for you. Hopefully you again have picked something up for today and are getting steady with doing your homework and prepping yourself for the markets. Good luck today.